Global markets are skittish this morning on fears the conflicts in the Middle East will lift oil prices dramatically, and they are up a bit this morning. Australia's labour market and services sectors remain resilient in PMI data, and New Zealand house prices dipped again in September after the RBNZ started cutting interest rates. That's coming up in our 5 Things in 5 minutes. And then in our bonus deep dive interview, ANZ agriculture economist Susan Kilsby looks at what the US dock workers' strike could mean for Australia and New Zealand.
If ships are delayed getting unloaded, they're going to be sitting there not moving and not getting back onto their next journey. So that will reduce the availability of ships. And when we see that happening, we often see shipping companies skip routes.
But first, in 5 and 5 with ANZ, markets wobbled overnight on fears the conflicts in the Middle East are widening and may endanger oil supplies. Brent crude rose 3.6% to $77 a barrel overnight, while West Texas Intermediate rose 5% to $73.72 a barrel. As of 4 a.m. Sydney Melbourne time, the S&P 500 was down 0.5%, and US Treasury yields were up 4 to 5 basis points. Focus is also turning tonight to non-farm payrolls data in the United States for September. ANZ head of G3 Economics, Brian Martin, says the market consensus is for a rise of 155,000 non-farm jobs.
If that is the case, that should be consistent with the FOMC reducing policy restriction on the economy gradually as fears of a sudden deterioration in the labour market are not materialising. We therefore think that a solid labour market report in line with market consensus for September would encourage the market to think that the FOMC will be cutting rates by 25 basis points when it next announces its decision on the 7th of November.
The risk-off tone overnight saw the Aussie dollar fall 0.52% to 68.50 US cents and the Kiwi fall 0.67% to 62.20 US cents. Number 2, Australia's trade balance held steady at $5.6 billion in August as both imports and exports fell 0.2% in the month. ANZ economist Maddie Dunk says on the export side, the dominant non-rural export category, generally covering commodities, rose 0.8%.
Within those commodity exports, we saw that yes, iron ore was down a bit, but that was more than offset by solid coal exports, which were up 7%, and high prices helped to drive a rise in coal exports in the month. One of the interesting things too on the import side was that fuel imports were up 4.7%, but that's despite the fact that fuel prices have been coming down. So a bit of a mismatch there in the anecdotes and what we actually saw play out in the data.
Number 3, the trade balance has had a number of months of gradual increases since falling from about $18 billion in June 2022 to $4 billion in March this year. Maddie says that it might still be too early to say whether the fall has bottomed out.
If you look at exports, that downward trend has really stabilized over the last 3 months. And then on the flip side, that upwards trend in imports has also been broadly stable over the last 3 months. So there are signs that we have been flatlining for a while now, and I think that it'll be interesting to see how the evolution of the trade balance plays out, because we are expecting that some of those softer commodity prices are obviously going to play a role in the trade balance story moving forward.
Number 4, Australia's final Judo Bank Services PMI for September was revised down slightly from its flash reading, although remained in expansionary territory. The manufacturing PMI was also in contraction. Maddie says labour market indicators, which alongside services activity are being closely watched by the RBA, were resilient.
We saw in the release that the rate of job creation accelerated for the first time in 4 months to reach its highest level since May. And when you look at the broader labour market data, we're seeing that things look pretty strong there. Employment's up around 143,000 over the last 3 months. The participation rate's at a record high. Employment to population ratio is close to a record high. So there are a lot of signs that the labour market is looking resilient, and the PMI data showing that that rate of job creation accelerated just reinforces that story.
Number 5, New Zealand house prices fell 0.5% in September, taking declines to 4.7% since February, according to CoreLogic. That was the first full month for the housing market following the Reserve Bank of New Zealand's August rate cut. But ANZ economist Henry Russell says a key piece of information required is sales volumes due later in the month.
What the CoreLogic data does not provide us, or what we don't have access to rather, is what's underlying the shift in prices. So what's happening with sales volumes, etc. etc. The RBNZ data that we follow does provide that snapshot. And so while prices are falling, it's not necessarily a surprise to us. We do continue to expect house prices to fall over the coming months. But in order to get a sense of what happens in terms of the recovery over 25 and moving forward, we really do want to get a sense of what's happening with sales, because that will provide a good indicator of where prices will head moving forward.
Henry Russell there. Now, in our bonus deep dive interview, ANZ agriculture economist Susan Kilsby has been tracking the build-up to the US East Coast port strike, which began yesterday. She talks to my colleague Alex Tarrant about how it might affect already rising shipping costs.
Global shipping costs have generally been trending up in recent months. A lot of that has been driven by the disruption that we've seen in the Middle East, which has restricted, shipping globally. At the moment, we are also seeing the port strike happening in the US. It's only early days, so it hasn't caused a big disruption as yet, but we are starting to hear of ships starting to back up there. So really depending on how long that strike in the US, which is really affecting most of the ports down the eastern side of the US, goes for, will determine the impact that it has on the global shipping market. But what effectively happens, and as we saw during the pandemic, is if ships aren't getting unloaded in a timely manner, they get backed up, and then it takes much longer to get goods to market. So it effectively reduces the supply of ships that are available at any one time and tends to push prices up quite a lot. And it can take months to sort of unwind the effects of these delays. So everyone's kind of watching that US port strike to see how large an impact it will have.
I guess it's still very early days and we don't know how much time it's going to take. But for New Zealand and Australian exporters, what could the impact be for them?
So in the short term, that impact won't be too large because a lot of what we export ends up going into the west coast of the US rather than the east coast. But over the longer term, what we'll find is that if ships are delayed getting unloaded, they're going to be sitting there not moving and not getting back onto their next journey. So that will reduce the availability of ships. And when we see that happening, we often see shipping companies skip routes such as those down to New Zealand and Australia. So it could really tighten up our opportunities to get product to market if that happens.
Because what have we seen just in terms of costs so far over the last month or two? Give us a scale of how they've been increasing ahead of this strike.
Costs for shipping have lifted sort of probably, it varies considerably from route to route, but have generally lifted about 20% in the last few months. We've sort of seen spikes of higher costs and then they come off. A lot of that's really been driven by the tighter supply of ships that has occurred because of the delays getting ships through the Suez Canal or ships opting to take the longer routes around the Cape rather than risk going through the canal. So we have seen a bit of tightening there. We did see prices come off a bit at one stage because the demand for shipping had come back. We saw a little bit of slowdown in exports globally and that sort of balanced things out again. But generally shipping costs have been trending higher.
So we've got obviously the Middle East situation with the Suez and then the US dock strike. Are there any green shoots in global shipping or those supply chain issues?
I mean, we have seen more ships being commissioned in the last 12 months as well. So there has been the fleet of ship has grown as well. So that has helped offset some of these restrictions. And the other factor that will help a little bit is we're just sort of over the peak of the seasonal global peak in shipping. So that usually happens in about the third quarter of the year. So we're just sort of getting beyond that now. So demand should start to ease off in general for demand for ships across that sort of northern hemisphere routes. So that might help alleviate the sort of tightness that we're seeing at the moment. But if this US strike continues for a prolonged period of time, more than a few days, I think we will see flow-on effects through the rest of the world.
Susan Kilsby there, speaking to Alex Tarrant. That was 5 and 5 with ANZ for Friday, October the 4th. Catch you next week with what those US jobs figures could mean for the Federal Reserve's rate cut cycle and what to expect from the Reserve Bank of New Zealand's rate review on Wednesday. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.